Good morning, everybody. This is the live market open for Thursday, June 9th. Hope everybody's doing well. I'm Yohay, Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX to read. As we begin the show, we're expecting a speech by ECB President Mario Draghi. Let's see if he moves the euro. I'll be on the watch out for headlines. Let's just take a quick look at euro dollar before we do anything else. At the moment, nothing is happening. Very, very stable, just under 114. Okay, we'll have one eye open for that. But let's talk about other things going on in markets. Good morning, Ged. Good morning, Luca. We did certainly have many movements with one surprising currency or overlooked currency, the Kiwi. As usual, we'll cover recent developments, talk about the various charts and levels, the next 24 hours, and of course, your questions. If you cannot see the chat box for any reason alongside the video, please go to the address here, tlk.io/fxread-forex-live-video. Okay, there will be no show tomorrow, so we'll do the preview for next week today, including the big Fed preview. All right. Again, as I said, the first event for this morning is a speech by Mario Draghi. Let's see if he talks monetary policy and if he moves the euro. Okay. In general, what's going on in markets? Well, the dollar is on the back foot. We talked about that yesterday, and this is an extended sell-off. One currency really, really stands out. That's the Kiwi. A huge leap, breaking above the double top. Let's show the charts while. So, look at this leap in the Kiwi, a rise of 1.7%. Also, in terms of pips, despite this pair's relatively limited movements, we're seeing quite a big move. So this is the double top at 70.50. Okay, I reached those levels in April. Well, once in April and the beginning of May. The next level of resistance is 71.72. Okay, we've had quite a leap. Again, what happened in New Zealand? So, the Reserve Bank of New Zealand decided to leave the interest rates unchanged. Some had expected a cut. That was the first positive surprise. But secondly, they were relatively upbeat about the economy. Yes, they did leave the door open to further cuts in the future, and we even might get a cut already in August, okay? But in general, they were upbeat about the local economy, upbeat about the global economy as well. In general, very, very positive. Specifically, they removed one piece of text that could be relevant. Let me try to seek that out. While I look for it, let's show you the chart so you won't. Anyway, we're currently at 71.32, reached a high of 71.47. They removed the line in the statement. The RBNZ, Graham Wheeler and his colleagues in Wellington removed the line in the statement that lower New Zealand dollar is desirable. Okay, they did have another mention of the exchange rate. They said that the exchange rate remains higher than appropriate given New Zealand's low commodity export prices, but they didn't say lower New Zealand dollar is desirable. Okay, so this was I think it is quite a subtle shift regarding the exchange rate. Nevertheless, the US dollar is on the back foot, okay, and everything looks a bit weak for the greenback. Remember, we had the terrible non-farm payrolls on Friday, and also Yellen's speech didn't offer anything new. Anyway, the level that I see here on the top side in Kiwi dollar, after this huge move, if we have a retracement, it's 70.50. It's a clear line of support. But if we move to the upside, it's 71.72 the next level, and then only 74 and 75. Actually, these are levels last seen almost a year ago. Okay, so the last time we had these kind of levels, it was back in June, exactly 1 year ago. Okay, this is quite a move. Also, other pairs, Kiwi pairs, are on the move, such as the neighbors, Aussie against Kiwi. It fell to a 13-month low as well. And similar moves are seen across the board. Just look at the differences here. I mean, I mean, it's a leap of 1.7%, while other currencies are not doing that much, not doing much at all. Okay, so thank you, Cyril. I see here you're sharing with Fabian and with everybody a chart. Let's share it with everybody else. So thank you, Cyril, for that. Here are some technical levels on the Kiwi. Okay, right. So more room to the upside, I guess. A few technical setups. Okay, you passed a few milestones, and it seems everything looks positive right here, right? Good morning, Amon. Good morning, Luca, Ed, Fabian, Cyril. Okay, so thank you for sharing that. Anyway, that was the big news of the night. I mean, happened at 9 GMT, and the move upwards continued with a few more public appearances by Graham Wheeler. Okay. Yeah, so that was the big news. Let's continue with other headlines. I'm still with one eye open to see if we have anything Draghi related. Oh, Draghi says the committed central bank can always fulfill its mandate. It's a headline I see now. Critical need for clarity on Eurozone setup. Don't think there's anything market moving in that. Let's take a look at euro dollar. Nothing. Yeah, ECB's Draghi says other policies must be aligned with monetary policy. Basically, he's calling on governments to do more, which is nothing new. Okay, it doesn't offer any further stimulus or anything new, so euro dollar maintains its level. Reach resistance at 114.10. Support remains 113.35. Further resistance is the classic or veteran resistance line of 114.60. Okay. Yeah, Cyrix is just showing why it got there, so you're not sure it'll continue higher with the Kiwi dollar. Anyway, it's been quite a move, of course. We might also see a retracement after such a leap. It says hedgers taking NYC longs coming out of GBP pre-Brexit vote. Well, I don't know. We have 2 weeks to go, and of course there are some adjustments. Remember that it's not only a UK event, it also impacts wider markets. The world wants the UK to remain in, more certainty than uncertainty. And of course, the second most relevant currency apart from the pound is the euro, because if the UK leaves the EU is left out by the UK as well. All right. More comments by Draghi. No, nothing that I haven't read out before. Basically, he's calling on governments to do more. Okay, let's continue with other events and then cover more currencies. Lazy short-term carry trade. Yeah, there is some carry trade in the Kiwi. I mean, when it's risk on, buy the Kiwi, sell the yen. But yeah, at the moment it's more like something like a general US dollar sell-off, because we're seeing stronger yen as well, stronger everybody. Okay. Yeah. All right. Super Mario turning into a Trichet, boring, no more fireworks. At least the Italian accent still a charm. Yeah. I would say that also Trichet's French accent is quite all right, but he made terrible mistakes, Trichet, and I think Draghi is a much better central banker. Another chart here shared by Styric. Let's share that with everybody else. So that's we talked about the yen, right? So here's the fall of the yen. Yeah, dollar yen made a correction and now extends its falls. Anyway, the lines that I see here, and it doesn't look oversold, right? If I understand correctly, the bottom part of the chart. So yeah, could be more developments here. I think 105.50 is a really critical level. That was the swing low. And in general, 105, the more round number, is also eyed by the Bank of Japan. Okay, Lucas says, definitely Super Mario saves the day for the euro. Hands down, a great central banker. I certainly agree. And Cyric is targeting 104.50 eventually. Yeah, Forex is never, we'd never hit exactly their support and resistance lines. So 104.50 could be a more significant level. Okay. And another chart here. Gold. So yeah, of course we moved on gold. We moved higher on that terrible non-farm payrolls report because remember, when central bankers ease more, money goes into other assets. They inflate. Gold sometimes perceived as a safe haven. Anyway, this is the had quite a move there, 1284. Yeah, I think that once we have the Brexit over, assuming we have the UK remaining in the EU, and we have sort of more stable markets, then perhaps gold some of the hot air will get out of gold. Anyway, chapeau Cyric, says Luca. You saw the dollar demise coming way before anyone else. Yeah. And another chart by Cyric. Let's share it once again with everybody before we continue to the other news. Right here. What's that chart? The US dollar, falling. Of course, the NFP was the big trigger. And looks like more room to the downside. Dollar yen may even try to overshoot down from 100 if stocks turn lower. Bank of Japan won't intervene until 100. The Bank of Japan will intervene, I believe, when it'll have the right conditions to intervene, when the world will not be looking, or something like that, or when the trend turns in favor of dollar yen, against the yen. But trying to catch a falling knife will be hard. Yeah. So Draghi continues speaking in Brussels, but the gist of his speech is out. I don't know if there is going to be a Q&A session. At the moment, he does not move markets. Also, last week, it wasn't his best performance in terms of moving markets, but we had our share of Draghi dramas in the past. Okay, let's continue. Another big thing we had yesterday was oil breaking resistance, breaking above the $51 level. Okay, and this sent also the Canadian dollar higher. So let's jump straight to oil. We're at 51.50 at the moment. Very close to the high, so the trend remains to the upside. Now I should change to a daily chart right here, and I can show you that. We broke above that October 2015 high. Now we're at the highest level since July. Okay, this is WTI crude oil. Brent is a bit higher. It's always they're trading together, but I'm not sure it's justified. One of the reasons was another production problem in Nigeria. We also had crude oil inventories falling, which is good for oil, but on the other hand, distillates and gasoline went up. For me, the most important part of this oil report was that US production, after many, many long weeks of falls, the level of production in the US turned up. So I would be careful with any dollar rally, or with any oil rally, or with any Canadian dollar rally. Let's look at the Canadian dollar. So the Canadian dollar is falling for the 5th consecutive day. We fell under that critical level of 127.50, currently 126.86, and we already, I see 126.30 as support, followed by 125. To the downside, to the upside, we have 128.30 and the double bottom of 129.10. Okay, that was quite a significant move. I think that, again, once things settle down in Nigeria and we have perhaps another week of a rise in US production, we might see things turn around. At the moment, it's all positive for oil prices, but I remain cautious, okay? More comments here. Well, Sirik, another chart of the pound. I'm staying away from it today. Euro pound, okay. Yeah, so many. I'm sharing this with everybody now. This is the chart of pound dollar by Sirik. Thank you very much for all the charts today. So we're sliding a bit to the downside. Yeah, the pound is a bit under pressure. No new polls for change. A day without polls, it's a bit too quiet. I'll just mention that for those of you in the UK, registration closes at midnight tonight. It's been extended using emergency measures, so everybody can vote and register to vote. Yeah, I must say that in many other countries, everybody is automatically registered, and everybody, I mean, there's by default, you don't have to make any special efforts to be eligible to vote. Don't know why in the United States, in the UK, and other countries you have to register. It's sort of another impediment, in my opinion. Anyway, no new polls, but I believe that, yeah, I mean, it looks very, very tense. Lots of pressure on the pound, okay? And yeah, you prefer euro pound, let's share that as well. Remember that euro pound, well, it has its movements, certainly, but if the pound falls, if we have a Brexit, the euro will fall as well. The euro and the pound can trade in tandem. The pound will suffer more, okay? So this is your chart, Sirik, of the euro pound, okay? Yeah, and everybody in the chat, you can look also at Sirik's charts. Also, Luca shares lots of charts with us. Luca says, amazing how seasonals are playing like clockwork so far this year in FX. Almost every month, currencies did what their seasonal trends supposed. Yeah, I'm also surprised how well, I mean, it was for the US dollar, it was an amazing month of May, and just as the month turned, things went negative. I think same for the pound and also for the Australian dollar. I'm also quite surprised. It isn't supposed to work this way. I mean, there are fundamentals, other things moving markets, news, but yeah, so far seasonals have been really surprising. I certainly agree. Okay, we talked about the euro not moving on Draghi. The pound, let's look at the chart, and my chart of the pound, 144.88 remains under pressure, slipping at the moment under 145, 144.40, and no, I would say 144.10. I don't know. Support 143.70 below this line. Resistance 145, which is very close, and 145.80, 146.50. We had that fat finger earlier this week. Since then, things are more stable on pound dollar. Waiting for the next poll. We had 24 hours with no polls. Maybe that can explain the quiet period. We'll talk about a few fundamentals soon, what we had yesterday, but let's continue with the charts. Dollar yen also here reflecting the weakness of the US dollar. The pair made an attempt to move above 107.65, failed, dropping back down, very, very choppy. The next line that I see is 106.10, but 105.50, 105 is a very, very strong level of support. I would say 107.65 returns to work as resistance. Okay. Talked about dollar CAD. Aussie dollar, 74.60 at the moment. It tackled here high resistance at 75, reached a high of 75.04, but it's a bit lagging behind. I mean, it had its time in the sun with the GDP, and of course the RBA didn't cut rates, but now it's sort of the Kiwi steals the show. Anyway, if you break above 75, 75.30, and 76 are the next levels. Support awaits at 74.40 and 73.75. Okay. Kiwi dollar, well, we talked about that. An amazing ride to the upside. 71, 72, and 70.50 are the lines I'm watching at the moment. Perhaps we'll have some kind of a correction after this huge rally. Dollar Swiss fell under support here at 96.40. We did hold on for some time, at least it's respecting the technical levels. Further support 95.50 and 95.20, I would say. Resistance 96.40. Euro Swiss, well, it continues sliding. Where's the SNB? There's a meeting next week. Maybe they'll intervene. Who knows? Anyway, currently further fall of Euro Swiss. after trading above 110. It's currently at the 109 handle. I would say 109.40 is some kind of resistance, 110 more important, and 107.60 is very low support. Euro pound 78.67 at the moment, made another move above 78.30, which still is a nice line separating ranges. 79.30 further resistance, followed by 80.20, support at 70.40. Not much movement over there. Euro yen, seems that the yen has the upper hand. 120.80 is support, 121.40 is the current level, 123, 124 are levels above. And pound yen, deteriorating. Of course, the yen has the upper hand. Also against the pound. The pound is under pressure because of these fears of Brexit, and the yen is just gaining nice ground against the US dollar. Some support here at 154, followed by very low support at 151.80. Resistance, high resistance 158. Lots of pips to be gained and to be lost in pound yen. Okay. And well, we talked about the price of oil. Moving on up. Yeah, Sirix says, careful with cat and oil. I believe there's one more push. Yeah. Another chart. Let's share it with everybody, and then we'll move on to the news. Here we are. Okay. So this is your chart of dollar CAD. Quite a big fall. We're off the lows on dollar CAD. Yeah, perhaps you can have another push, another strong week perhaps for oil, and then I think there are limits here. Again, once oil prices began rising, we had production rising. It took some time, but we had some kind of a turnaround in the level of production in the US, and this could be a turning point, okay, in my opinion. Again, another look at euro dollar before we continue with the news. 114.10 remains a cap, 114.60, high resistance, 113.35 on the downside. Okay, now let's move to fundamentals we had yesterday. Nothing that really rocked the boat apart from the RBNZ, of course. But let's talk about that. We had UK industrial output beat expectations. Some good news from the UK manufacturing sector. Very temporary effect. Again, every piece of news, every word coming out of David Cameron, Boris Johnson, and other leaders has much more of an impact at the moment. 2 weeks to the referendum. The US jobs report, it's a Fed favorite, but a bit lagging. It's for the month of April. In April, we had a weak jobs report, but we had nearly 5.8 million job openings annualized in the US, better than expected, and some good news. Yeah, so maybe we'll have a positive revision for April. We'll have to see. We had a terrible jobs report for May. Let's see if the jobs one is better. Anyway, for June, we're not going to have a rate hike next week. Canadian housing, more or less as expected, didn't rock the boat too much. Oil prices had a much bigger impact. Another piece of good news from the UK. So 2 pieces of good news, not on top-tier figures, and now top-tier event is, of course, the Brexit referendum. But anyway, an independent think tank makes this monthly assessment of GDP. So for the 3 months ending in May, that means March, April, May, not a normal quarter. We had growth, according to this think tank, neither, or whatever it's pronounced, 0.5, better than expected. So also some good news, at least for now. It seems that according to this think tank, the economy in the UK is not tumbling down ahead of the referendum. Yeah. Oil inventories, as I mentioned, crude falls, gasoline distillates rates, and production rises. That's for me the key point. Just a bit, yeah. It's not anything crazy, but it's a change, of course. Let's see if it's a one-off or not. Chinese CPI, I must admit I didn't look at it. So let's look at it now. So yeah, more or less, exactly as expected. Sorry. No, sorry, here we are. So producer prices somewhat better than expected. Consumer prices a bit worse than expected. Yeah, on average, it's as expected. Didn't rock the boat. We had trade downs. Industrial production is more important. GDP. So many other figures coming out. Which are more important? Trade balance in Germany, it came out earlier today, higher than expected surplus. But imports are down. So if you have a surplus because imports are down, it's not necessarily good news. It reflects weaker domestic demand, contrasting other figures. All right. What else do we have today on the agenda? Apart from Draghi's speech, which at the moment is a non-event, a German trade balance. We have UK trade balance at 8:30 GMT. Again, should have a very, very, it's a second-tier figure. We have more important figures, especially next week. And with the referendum, yeah, so a deficit on the non-EU. More important figure is the wider figure. So we had a rising deficit in the UK, 11.2 billion, the same as expected now. Both sides of the EU the Brexit Remain campaigns will try to take the figures to their advantage. I don't think it should have too much of an impact. At 12:30 GMT, weekly jobless claims in the US after a few bad weeks, probably because of the Verizon strike. We are back to normal here. A small rise from 267 to 270 is on the cards now. Okay. Some figures in Canada, the new housing price index, or as they say, HOSE in Canada. Anyway, oil prices are much more important, but you never know what's going to move markets. What is more important in Canada is a speech by Bank of Canada Governor Stephen Poloz. Let's see if he likes the rise in oil prices or not. How he sees the Canadian economy. Forecasts have been lowered. He probably isn't very happy with the strength. This is a press conference accompanying the release of this report by the Bank of Canada, the BOC review. Okay. And since we don't have a show tomorrow, I want to talk just a bit about tomorrow's events. Actually, the European morning is quite quiet. I'm sure, the pound will move if we have a new referendum opinion poll, but I don't think we'll have, anything else, in terms of indicators. But in the US session tomorrow, before markets close, we have the Canadian jobs report. Okay, so that's going to be tomorrow at 12:30. Always a big market mover for the Canadian dollar. Okay, so we're expecting a rise of 3.8 thousand in jobs and no change in the unemployment rate at 7.1. And the last word for the week belongs to the consumer sentiment. Reuters consumer sentiment, Reuters University of Michigan, expected to slide just a bit from 94.7 to 94 points. So these are the main events, for today and for tomorrow. Okay, I see here a few comments, questions. Okay, well, actually nothing new. Okay, so these are the main events for today and tomorrow. Let's take another look at the charts. If you guys have any questions, shoot. Well, pound is sliding a bit more. Kiwi is, very, very minimal profit taking. It's the opposite of a dead cat bounce. It's not a real correction. Okay. Try to pick up more from Draghi's speech. Yeah, no, nothing noteworthy. Anyway, maybe an important speech politically, but not a market-moving one. Okay, let's now do a preview for next week's events, and then we'll do the wrap-up for today. And of course, your questions, as always, are more than welcome. So this is the preview for the week of June 13th to June 17th. Before we begin, I'll just say the main event is, of course, the Fed decision on Wednesday. No rate hike is expected. We do expect, though, there's a press conference and fresh forecast. But let's begin from the top. Of course, tension towards the Fed is already exists now, but it will be evident from the wake of the new week. Before even the week begins, we have Chinese industrial output over the weekend, could impact the Australian dollar at the start. On Monday, there are no special events, tension towards the Brexit, tension towards the Fed decision. On Tuesday, we have UK CPI. In normal times, this should have a big impact on the pound because it impacts the policy of the Bank of England, interest rates, but I'm sure it'll have an effect. It's a top-tier figure. It's not a minuscule one, but still it's a bit overshadowed at the moment. Also on Tuesday, key, also top-tier release from the United States retail sales. The American economy is all about consumption, so and this also feeds into the Fed decision, could cause some last-minute jitters for the US dollar. On Wednesday, we have quite a few releases before the Fed decision. First of all, the UK jobs report, also key for the referendum, key for the policy of the ECB, the Bank of England. The wages are important as always. We also have PPI figures in the United States, producer price index, warm up towards the CPI, though the Fed will already have CPI figures before we do, I assume. Oil inventories is always a market mover. Let's see if production continues rising. I think it'll be the key. And for those trading, the soaring Kiwi milk prices remain of high importance. And then on Wednesday, I invite you all to join a live coverage with Valeria Bednarek, Mauricio Carrillo, and myself. The Fed decision is at 6 GMT. The live broadcast will begin at 5:45 GMT, PM, of course. So what's going on with the Fed? First of all, after the recent jobs report and towards the Brexit, and in general, no rate hike is expected. The interest rate, once again, is expected to remain at a range of 0.25 to 0.50. Okay? No rate hike is expected. If we jump for a second to rate hike expectations for June, they're standing at about 4%. I'm refreshing it now. No change right here, okay? For July, and that's the key, I think, for the decision. Currently, they stand in, just above 26%. And this will be a key. If they open the door, I believe they will leave it at least open for rate hike in July. They'll say, of course, it's data dependent. They won't say in the statement, but maybe in the press conference, that the Brexit referendum is also an issue. Remember, it's only 8 days afterwards. If there is a Brexit, of course, forget about rate hike. But assuming there's no Brexit, they won't say it depends on the Brexit. They'll say it depends on US data, and I believe they'll leave the door open. In addition, they'll be cautious about employment and also about inflation. Inflation is improving, but it was a big source of worry. And now things are improving there, but on the other hand, employment is getting worse. So I believe they'll be cautious on both topics, inflation and employment. Now, with the fresh forecast, we have 4 things to watch out for. Forecasts for growth, maybe they'll be a bit lower. Forecasts for employment, well, now the official employment rate is 4.7, so I think we'll have minimal changes there, and inflation also shouldn't change that much. But the 4th thing is the most important thing for markets, the dot plot. The dot plot is what the Fed sees as sort of the path of interest rates. Remember in December when they made the historic rate hike, they foresaw 4 rate hikes in 2016. Nobody believed it. And anyway, in March, they slashed it down to 2 rate hikes in 2016. If they keep it at 2 rate hikes, that's a hint for me at least, that they are ready to hike rates in July and then in December as well. Okay, 2 rate hikes. Some would say September because there's fresh forecasts and a press conference. I would say it's a bit close to the elections. Nevertheless, if they leave it at 2 hikes and they don't cut it down, the Fed usually starts optimistic. All the forecasts are more optimistic, and then they slash them down. If they don't slash forecasts, then it's positive for the dollar. If they do that, it's of course negative. And with the NFP and other things and the history of the Fed, the dovishness of the Fed, I believe they will. I mean, they could still slash forecasts. That will be a key if they leave it at 2 for 2016 or 1. Of course, also the forecast for 2017 and 2018 matter. Okay, and yeah, Yellen in her press conference, she'll be very careful on one hand, on the other hand, and all those. I mean, if things get worse, we'll loosen. If things get better, we'll tighten. One emphasis will be every meeting is live, leaving the door open for July. Okay, so that's more specific. That's the key event of the week, bang in the middle of the week on Wednesday evening here in Europe, in the old continent. But that's not it. The Fed begins a series of 4 rate decisions. So on Thursday, before the other rate decisions, we have New Zealand GDP, and see if the Reserve Bank of New Zealand knew something with its positive forecasts. So we'll have that basically right after the Fed. A few hours later, we'll have the Australian jobs report, key, of course, for the Australian dollar. Of course, if we have a dovish Fed and good figures from New Zealand and Australia, these currencies will rally hard. And if we have an hawkish Fed and weak reports, these currencies will crash. But it can always be a mix of everything, right? And then later in the night, we have the Bank of Japan's decision. They're unhappy with the strength of the yen. On the other hand, there are elections coming up in Japan for the upper house, not as important as the lower house, but still, I believe they won't change policy this time, but you never know with the Bank of Japan. This year, they managed to surprise us once with negative rates. On the other hand, when they did give us hints and expectations were high, they didn't do anything. So they don't always guide markets. They sometimes provide a huge surprise to the upside or to the downside. In the morning, the quarterly decision by the Swiss National Bank. No changes expected. They'll continue pledging, to intervene in markets, of course. But also with the S&B, you never know. After that S&B bomb that devastated a few brokers and quite a few traders, you never know. That's also Thursday. And the last rate decision on Thursday, the fourth one in less than 24 hours, comes from the United Kingdom. Of course, they'll try not to say anything because it's exactly 1 week before the referendum. They've already been painted as political with their warnings about recession. I believe that with the rate decision, remember, we also have the MPC meeting minutes, and I believe they will provide their economic warning, hinting things will get worse if you vote out, at least in the short term. In the long term, nobody knows, okay? And we'll have also the US Consumer Price Index. Well, after the Fed, it means a bit less, and the Fed will probably have it beforehand, but still worth noting. And on Friday, some US housing data, and of course, echoes from the Fed on Thursday, also on Friday. So I would say that it's a very, very busy week, much busier than this one, that's for sure. And the Fed decision is first and foremost tension building up, and then once we have the decision, and then we'll have so many other figures as well. We'll have first reaction immediately after the decision, then a second reaction in Tokyo, a third reaction in the European session, and while other central banks also make their rate decisions. A very, very busy week, okay? So that's our preview for next week of June 13th to June 17th. I see here a few comments, questions before we move to the wrap-up. Luca asks, does anyone have a study of historic volatility or average ATR for different pairs for summer months? I don't have. Luca, email Mario at ECB. He will be happy to help. Yeah, Mario Draghi answers all emails personally. Sirix says indices dropped like a stone and the yen already 50 pips down. Okay, let's look at the charts quite soon. And look if you tried backtesting. Okay. Comments between y'all. Dollar yen, you mentioned quite a fall. Yeah, 106.33 in the past hour. We had the European markets opened on the downside. That could explain some of the sort of risk off that helps the Japanese yen. Okay, and so far the low, we're very close to the lows. 106.30, 106.10 is some support, followed by 105.50. Okay, other moves here. Well, euro is a bit weaker. Pound is significantly, well, more than the euro. So it looks like some kind of risk-off move. Dollar CAD moving up, yeah. So a stronger dollar against everybody apart from the yen. This is what I call risk-off. Kiwi backing down, but still remaining quite strong. Oil prices a bit correcting. So I would say a worse mood in markets now, at least for now, is weighing on, yeah, all yen pairs. I certainly agree, and the pound looks indeed like a weaker link. Thanks, Sirik. Okay. No new headlines from Draghi. Continues the speech, but remember, in many cases, the speeches, as in this one, are released and the headlines are digested and published immediately before the actual words come out of the speaker's mouth. Okay? So this is the wrap-up for the live market open for June 9th. It's Thursday, and things are moving. First of all, the dollar sell-off continues. It changes a bit now as we speak, so slightly, but in general, the dollar remains weak after the non-farm payrolls and Yelen's speech. Now we're seeing a very minimal correction. The Kiwi stands out. Why? Because the RBNZ, not only did they refrain from cutting rates, they were relatively upbeat about the economy, local one, relatively upbeat about the global economy, and also didn't express their desire for a weaker Kiwi. A small change in syntax there, okay, and the wording of the statement. Oil breaks resistance. It's sliding a bit now, but it's trading above the October 2015 high at the highest level since July 2015. Brexit quiet on the UK front, no new polls. And if you're listening to us and you're in the UK and haven't registered yet, you should do it by midnight UK time tonight. So go out and vote, whatever your vote may be. Data yesterday was not that significant, well, apart from the RBNZ. I would say that what I found significant was the rise in production of oil in the United States. That's a shift, hasn't been seen in markets because, well, the level of crude in inventories fell, there are problems in Nigeria, so oil is well supported. And US data was also positive, didn't have an impact. The JOLTS report that the Fed cares about was, well, I mean, not overly huge positive surprise, but slightly better than expected. Today on the agenda, well, let's look at the charts first. So we are seeing some strengthening of the US dollar, minimal against the euro. Euro dollar was rejected from resistance at 114.10, further resistance 114.60, support 113.35, 112.50. The pound is sliding. As far as I know, no new polls, just the ongoing pressure. 144, 143. 70 support, 145.80, 146.50 resistance. Dollar yen, quite a move to the downside. I would say risk off. It didn't manage to conquer 107.65, support 106.10, 105.50. Dollar CAD a bit rising a bit. Oh, it managed to break under 107.50, which was a clear separator of ranges. 107.50 remains resistance if we have oil prices falling. And then followed by 128.30 support, 126.30, and 125. Aussie dollar 74.50 at the moment, sliding in range. 74.40 works as support, 75 is resistance. So far rejected at resistance. High resistance 73.30, 75.30, and 76, support 73.75. And the star of the day, the Kiwi flying higher, correcting just a bit, 20 pips from off the highs. 71.27 is the current level. 71.70 is an old line of resistance. Support at the double top, the previous double top of 70.50. Quite an interesting move there on the Kiwi. Events for today. We have, as we speak, we have a speech by Draghi. It turns out into a non-event. In terms of markets, maybe important politically, he urges governments to do more. German trade balance, well, on one hand, it came out in higher surplus, euro positive. On the other hand, because of less activity, less imports, not so good. UK trade balance is expected to show a deficit of 11 billion once again. Shouldn't have too much of an impact, but it will be used by all sides in the Brexit debate. 12:30 GMT jobless claims, the weekly barometer from the United States should show that things are okay. Canadian new home price index at the same time. More importantly, in Canada, a speech by Stephen Pelosi, the governor of the Bank of Canada, alongside the release of their report. Let's see how they view the economy. They were very optimistic early in the year, then not so much. Let's see what the mood swings in Ottawa are now. And talk a bit about tomorrow's events. The focus is on dollar CAD in terms of indicators, but I'm sure we'll have fresh opinion polls also in the UK. Canadian jobs reports at 12:30 GMT, always a big market mover for CAD. And at 2 GMT, the last event of the week, can have sort of the last word. The consumer sentiment, not expected to change much, but you never know. Okay. Another comment here. Many algos have 34 EMA, 89 EMA. Hey, moving average. Okay, some comments between you guys. Yeah, so that's it for today. As I said, there will be no show tomorrow. I'm going to be traveling, but stay tuned for coverage of the Fed decision Wednesday, June 15th. Valeria Bednarik, Mauricio Carrillo, and myself will be back. I'll be back for this live coverage. Perhaps once again next week, perhaps not. I'll, of course, stay tuned, follow FX Street. And then towards the referendum, we'll have a before and after, okay? I found yesterday I sent Mauricio very nice headlines, I think, in my opinion. Nice headlines for the before and after of the referendum. And yeah, so that's it. So I wish everybody a safe and successful day today. Tomorrow, a great weekend, a great week next week. As always, the show is available for rerun. So is the wrap-up and the preview for next week, which includes a hefty segment about the Fed decision, undoubtedly the big event, even though there's no rate hike on the agenda. Yeah, so that's it for today. We'll stay in touch. Have a great day today, tomorrow, weekend. Hope to see you all in the live coverage next week. So that's it. Thank you and bye-bye.